Today, we are going to learn capital structure. Capital structure. Capital structure. Let us briefly understand what are the topics that we are going to learn. This is my flow of presentation. We are going to learn capital structure concept. We are going to learn capitalization, then capital structure. Then what do we mean by financial structure and capital structure? Then forms of capital structure. There are different forms of capital structure. Then capital structure theories, net income approach, net operating income approach, Modigliani-Miller approach, so on. Foremost, we are going to start with the discussion called as capital structure. Capital structure can be defined as the mix of owned capital and borrowed capital. In the context of a company will have different sources of capital: owned capital, equity share capital, borrowed capital, debt capital. That is the capital which the company has going to raise by issuing equity shares. That is called as owned capital. The capital that the company is going to raise by issuing debentures or bonds, that is called as borrowed capital. And one more thing, for a capital structure, maximization of shareholders' wealth is prime objective of a financial manager. As a financial manager, he has to think how best he can or she can work for the maximizing shareholders' wealth. That is wealth maximization. What do you mean by wealth maximization? The market value, the market price of the share has to go up in the stock market. Then what do you mean by capitalization and capital structure? Capitalization refers to the total amount of long-term funds employed by the firm. It's a total amount of funds employed by the firm. Then what do you mean by capital structure? Capital structure consists of different kinds of capital that the company is going to have in its balance sheet. It can be equity share capital plus borrowed capital, that is debt capital, or it can be equity share capital plus preferred share capital plus debt capital. Then what do you mean by financial structure? Financial structure is different from capital structure. It is a composition of all the liability side of the balance sheet. And we can say all the liabilities put together, we call this as total liabilities. The total liabilities, we can say that it is a financial structure. Then what do you mean by capital structure? Capital structure is a proportion of financial structure where company has raised the capital, either through issue of equity shares, that is equity share capital, that is owned share capital, or raising the capital by issuing preferred share capital, then or capital which the company has procured by issuing debentures or bonds, that is called debt capital or borrowed capital. It is represented by shareholders' funds and long-term loans. Capital structure is a part of financial structure. Then the capital structure of a company generally includes equity share capital, equity shares, preferred share capital, debentures or bonds, long-term loans. Till now, what are the things that we are going to learn? Let us summarize. We have learned equity shares, preferred shares, debentures, bonds, long-term loans. Theories of capital structure. We have net income approach, net operating income approach, then traditional approach, Modigliani-Miller approach.